Okay, very good morning. Hope you had a good weekend. It's Monday the 14th of May. Good to be back in the hot seat. We're going to have a look at the week ahead in terms of a few things to be aware of on the calendar. Today being particularly quiet in terms of scheduled events, but nonetheless there's a couple of news items to get you up to speed with from the weekend. And then, as I said, we'll look through a couple of the charts, but we'll look at that in more detail. I'll send out the weekly strategy report to those on the Amplify list later on today at midday, and that will include a bit more technical analysis. So just getting up to speed with just generally what's been happening. And obviously I was away last week and I missed then the kind of continuation of some of the pound weakness, that weak data in the UK ultimately leading to the Bank of England's decision to keep rates on hold, which was as expected given the repricing that happened with the weak growth, the kind of dovish MPC communication, but then that followed through as well in the inflation report. But this morning things have kind of settled, continuation of some dollar weakness to get the week underway, some slightly positive sentiment from overnight, I guess, in the Asia Pacific region in terms of the equity performance. The dollar just continuing some of the weakness that we're seeing at the back end of last week. So the Dixie's trading down about 0.2%, so consequently in the top left both major pairs positive. We've had a test already this morning in the Euro future up at around that R1, which has held some of the price activity, but sitting on that 120 handle. And then after an initial move down to pivot this morning when Europe came in, cable's seen a pretty decent bounce all the way back to a brief move above 136, where it trades just below at the moment. European futures, the DAX, then small gap up this morning, but that's already kind of naturally retraced that move back to pivot in the 13,000 handle. Again, nothing really too monumental, I'd say, from just going through the press this morning that's occurred at the weekend. More so a bit of a follow through from continuation of just solid closes into the close on Wall Street at the end of last week, and as I said, that kind of fed through into Asia overnight. Looking at fixed income futures then, T-notes marginally lower, but bunds looking a little heavier this morning. So mild bit of risk on, you could say, in that respect across the major asset classes. Just getting into some of the headlines then that have come out over the weekend, and doesn't really seem like much has changed since I last kind of was looking at things in reference to the customs union for the UK. Theresa May faces deadlock over Brexit customs rules. Senior politicians attack both proposed options. This is kind of what was being talked about over the weekend in various different UK publications. She's facing deadlock over her key controversy on the customs rules after Brexit. Senior politicians rubbished both options being studied by her warring cabinet. So certainly in the mix of the kind of weakening political situation, you do have to keep into mind as well, there has also been this kind of Brexit timeline shortening, and as such this kind of re-emergence of the Brexit narrative, if you like, back to the forefront, which ultimately is being fairly negative in regards to still the contentious issue of how they're going to resolve this customs union specific point. The other thing that came out of the weekend that's quite interesting, there's a couple of source comments that came out of the Independent. I'm not sure if you caught this, but it was talking about Brussels is set to push for a 6-month extension to the UK's transition period out of the EU. This is sources specific to the Independent, saying that officials will seek the change late on in the negotiation process. Now, I'd say just looking at it on the surface here, that would probably be a net positive for the sterling, if anything, meaning that if push comes to shove and we get close to the kind of D-Day deadlines, and if we like, that's kind of unofficially October time when we're looking for sign-off then to be ratified across European national parliaments, and if we do get to the end of this kind of March 2019 Article 50, even though we've got till the end of 2020 with the transitional deal, if Europe are already making noises about further extensions, then this just allows more time and alleviates the kind of pressure cooker, if you like, which seems to be just getting more and more tense at the moment. So maybe it's just something to be aware of. From a Brexit point of view on the calendar for this week, European Union Chief Brexit Negotiator Barnier briefs European Affairs Ministers on the UK, the status of talks with the UK, so that's coming up this week. And then Prime Minister Theresa May meets with her Brexit cabinet on Tuesday, so tomorrow, to discuss plans for a post-withdrawal customs union. So given the fact that there is that scheduled official meeting with Theresa May and her cabinet, I'd be fully expecting potentially some source comments, an update from Telegraph, Times, journalists like Laura Kuenssberg or Faisal Islam on Sky News. I'm sure something will emerge at some point today about the customs union ahead of that key meeting tomorrow. So something to just be potentially vigilant for. Elsewhere outside of Brexit, from an economic standpoint, kind of continuation, I guess, of what we have been seeing, which is general weakness, and this feeding through into, I guess, consumer sentiment, which has led to the fact that British consumers tightened their belts further last month, according to data from Visa, the credit card company. Now, don't get me wrong, this isn't the kind of data that moves the pound directly, but certainly just adds to the general theme that we've been seeing for the UK consumer. And essentially, if you look at the actual stats that they've posted, Visa said that inflation-adjusted spending on its credit and debit cards in April was 2% lower than last year, the same decline as in March, and one of the steepest declines in the past 5 years. So, as we well know, a country heavily driven by the service sector, it's highly important that we continue to see people spending in order for this economy to continue performing. But as we've been seeing, this kind of decrease in activity has been leading to a gradual economic slowdown, as apparent with the weak GDP that we've had printed for the first quarter. On the flip side, though, if the pound's been depreciating overall as a trend, then what has been happening is the FTSE has been rallying, and I saw a stat this morning just to be aware of, the FTSE having rallied now for 7 weeks in a row. Well, let's just have a look at the FTSE here. I've got the FTSE, I was looking at the CFD this morning, because here we are, up at the record levels, not too far away. So talking about all the economic negatives, the fact that the Bank of England, we've had this severe repricing and expectations about forthcoming interest rate rises for the UK, that with the generally weakness of the pound, it backing off that recent run-up that we had, has helped elevate the FTSE companies again with their kind of internationalized revenue base, if you like. And the FTSE's rallied for 7 weeks in a row, as you can see here. 1, 2, 3, 4, 5, 6, 7. This kind of period here of where we are at the moment. So it's added this period at about 13.5%. Sequence of weekly rallies is extended to 8 weeks only once in the last 21 years, just to give you a statistical point of reference. So we've only added an additional 8th week of gains only once in 21 years. The last time it did do that was back in 2010, when the run lasted for 9 weeks. So just coming up to that key kind of area, I guess, that 7,800. To be interested to see how it reacts at that point, if indeed we continue to get some weakness in the currency. But this morning, as I said, if anything, cable on the ascent. And I wouldn't say this is anything to do with those Brexit headlines we've been discussing or anything like that. This is more of a dollar play. It's dollar weakness that's really the driving factor here. So consequently, euro dollar also rising. Just having a look at cable here in its recent activity. I guess it's kind of on the upside, R1, and then looking at the end of last week's high in the futures. So if I just circle this here, just above you've got that 36.17. That was also back on the 8th around the highs, and so a previous support point back on the 1st, and so on and so forth. So just kind of the range play on the high probably needs to be watched on any further recovery. And then likewise, I know Piers was talking about the kind of bigger, broader, long-term scenarios. Are we going to go to 140 or 130 first? I think the reality is, at least for this week, that we're going to be pretty locked within this range, I would imagine, barring anything massively unexpected. One key catalyst to look out for, of course, on the calendar, if we look at the week ahead, is tomorrow, really. Not only have you got that Brexit Cabinet Customs Union meeting with Theresa May and her senior officials, but one that I'm particularly interested in is we've had a series and a string of weak economic data out of the UK. Now, one thing I'm going to be looking at is this average earnings data that comes out of the UK alongside the latest jobs report. That'll be at 9:30 AM on Tuesday. And obviously we'll be looking at this as the kind of precursor as to wages in the UK, generally speaking, have been consistently picking up. So although inflation has been dropping off fairly quickly, is that going to be that decline mitigated by the fact that actually sentiment might turn eventually, given the fact that wages are now getting to a point where they're meaningfully moving higher, alleviating some of that pressure on the consumer, which is obviously played out in those visa numbers as we just saw. That could add as another little kick for the pound to recover, and obviously any positive movement on progression on the customs union would also help, and a break of that kind of range high might act as a bit of a platform then to recover some of the lost ground that we've had over the recent weeks since the data has been softening. So it's something to just be aware of for the pound. Okay, a few other headlines to get you up to speed with. This is one, and this is looking at oil. Obviously we're trading above a 70 handle. This, I guess, is one of the things which, having been out the market last week, just looking at the charts, we got up to what, nearly 72 bucks at one point. And just having a quick look at some of the news flow this morning, because oil is backing off a little bit from those highs, and we're down about 40 cents at the moment. Two real kind of factors, I guess. One is that US drilling continues to increase at a fairly rapid pace. To give you an idea, Baker Hughes, which is that company that released their rig count every Friday evening, US drillers essentially added 10 more rigs in the week to May 11th. That brings the total active rig count in the US to 844. That's now the highest level since March of 2015. An addition of 10 is fairly high, I'd say, on a week-to-week basis. So I guess there's still this kind of ability, the US North American output continuing to move quite substantially higher, being the biggest producer now and continuing to remain that way. I guess these rigs acting as a further kind of nod to there's no sign of that changing anytime soon. So despite all the bullish factors that we've had, this kind of the US, this Iran situation and the sanctioning that could come into place, the OPEC commitment between Saudi in particular, but also Russia about continuing to cut. Maybe there's still this side part to be aware of is North American output. In addition to this, a few analysts talking about, although around 1 million barrels of oil a day is likely to disappear from the crude oil markets if the US sanctions on Iran bite, the fact is there's still a bit of uncertainty on how much of that bite will actually materialize. Germany has said it will protect its companies from US sanctions. Iran has said French firm Total is yet to pull out of its oil fields, while it seems the Chinese are also ready to fill the void created by the US. So again, still yet to see, and obviously the timeline is it's not till several months until this actually materializes in effect. So still something to be monitored if that does change over time in terms of the deal that the US put forth. Other things to be aware of over in Europe, you probably read quite a bit of Italian news. So just to give you a bit of an update, I wouldn't say this is spooking the markets, so to speak, this morning too much, because I guess largely the threat of this being a real destabilizing push for an Italian exit is kind of being dissipated by the fact that the most kind of prevalent party in this talks, the Five Star Movement, kind of changed their tact several months ago about the movement away from actually exiting Europe. But to give you a bit of a flavour of what's going on, so the anti-establishment Five Star Movement and the far-right League have spent the weekend locked in talks to forge a common policy programme. If you remember that, given that hung parliament situation, the Five Star won 32% of the vote at the election, the League took 17%. So this kind of fractured party nature of Italian politics means they need to formulate some way of making a cohesive government through a coalition. And these are the two largest groups in Parliament, and together they could muster a majority in both houses. So Di Maio and Salvini both have said they've made progress on plans to cut taxes, boost welfare and bolster efforts to stop irregular immigration. That's kind of the key things that have been discussed at the weekend. So something to be monitored, I guess, but inherently the speed of Italian politics and the complication of it, just in terms of these are, political parties that do have varying different views on a lot of these different policies, so inherently it takes a long time for them to come to some sort of concession and compromise on what exactly it is that they're going to agree upon. So hence then, I don't think this is, again, too much of a worrying fact as yet, but certainly something that will need to be monitored just going forward. Just going back to the charts quickly, a couple of you guys in the chat just mentioning the DAX just breaking down a little bit. So let's just have a look on a minute chart, type of price movement. So yeah, quite a big pickup in pace just a few moments ago. Just having a look, that level, I'd imagine this is probably more just a bit of a range break, some stops tripped potentially, and just a flush down to that S1 before a bit of a bounce. The fact that the price activity is already quite aggressively bounced off that level would suggest to me that this isn't really anything news driven as a single catalyst headline. More, you can see the price on that break from what would have been the low from the 11th, so I guess the end of last week. Probably that just giving way, acting as a bit of a trigger for some stops just being taken out. You can see here when I start broadening out the chart, that level is probably the one in focus, and as you can see, after the push and the flush of the stops, we've gone all the way back to the initial break point. Kind of makes sense. So would I be anticipating that move to continue going further and further down to the downside? Well, if that was to be the case, then I guess obviously you've got to look at a couple of price points on the descent. So you can see here around that S1 level, just marking it up, we've got that previous high that was seen on the morning of the 9th, so I guess the beginning of the prior week. And anything below there, then we'll be looking at the second half of last week's low point down at that 12,928.5. But again, like I said, there hasn't been a great deal of at least big single stock news that would make me think I really want to be heavily short that market. I guess the one thing is, from a correlation point of view, the euro is strengthening at the moment, more of a byproduct of dollar weakness, and you do tend to see that play out in terms of it being a net negative for some of the German export names, such as the car makers, Siemens, so on and so forth. So maybe worth just keeping an eye on the euro, given the fact that the economic calendar today is particularly quiet if you're looking at the European equity market and the DAX specifically. Okay, rounding off the news, just quick look. You've had Fed's Mester speak this morning on Bloomberg. She was just saying the Federal Reserve should continue its gradual approach to raising interest rates, given that inflation has not yet reached the US Central Bank's 2% goal in a sustained way. So, as I understand, US inflation last week was a touch softer than expected, and kind of we had that, if you remember, in core inflation in the US, that pop up from, I think it was 1.8 to 2.1%. People were expecting, is this the beginning now of a real inflation return? But it basically remained at 2.1%, didn't move any higher. So granted, it is at that kind of key 2% level, it hasn't continued to shoot higher. And you're getting people like Mester, who, if I just refresh some of the newer guys as a reminder, this is your kind of hawk or dove hawk scale. Loretta Mester sits right on the far hawkish side of proceedings in terms of her policy perspective. So I think the key thing for this is that the Fed aren't changing their tact. They're still very much on course. The federal funds rates, short-term interest rate futures, are still pricing 100% for a June rate hike, and very much so I'd expect that to materialize with an additional hike. The question is, are they going to do 3 more instead of just 2 more, which is currently the communication? But I think quite telling that she's still adopting the specific language and the current party line, if you like, of the Federal Reserve, which is gradual. And so, you know, this helping, I guess, this kind of continuation of this gradual easing off of the dollar, given this kind of heightened fears that were materializing just a few weeks ago, seem to have dissipated for the time being, given data, the inflation scare is over for the time being, at least. Okay, quick look at the calendar for today. As I said, economic data, incredibly quiet. The one thing that you do have coming out is the OPEC monthly report. So if you're an energy trader, certainly worth keeping an eye out. I'll keep you up to speed when I hear a specific time for that. I'd say on a regular basis, although there isn't a set time, it tends to come between around 10:30 to midday. The Squawk obviously will point it out when they have a more definitive time, so just be aware of that. Compliance levels, demand levels certainly need to be monitored. But one thing that does stick out today specifically is quite an intense speaker schedule. If we go through, we've had Mester already. You've got Bank of England's Mark Carney, ECB's chief economist. They're speaking at an event. This is about gender and career progression, so certainly not specific on their respective monetary policies or their economies, but nonetheless, just given some of the focus we've had more recently on the Bank of England and their communication, I'd say unlikely Carney will say something, just given the fact that he had the full kind of suite of events last week, that being the projections in the QIR and the press conference. So very rarely would he look now to say something any different from what was communicated last week, but nonetheless, the governor. So would probably keep a half an ear out for that. It starts in about 15 minutes. Going through the day, Lautenschlager, Prayer, Bullard from the Fed. So quite an ECB-centric day. So maybe just be aware of those timings, just so we can get an idea if we need to be aware of any Euro strategies for this afternoon. Looking at the week ahead, as I said, tomorrow I think could be quite interesting from a UK perspective, just given the wage data. You've also got that Cabinet Customs Union meeting. And then from the US, one thing that will be interesting is US retail sales. And then going further into the week, into Wednesday, you've got these are final readings, inflation data, Germany and the Eurozone, your oil inventory numbers as per usual, and then IP and manufacturing production from the US. Thursday, anyone trading overnight, the Aussie currency, you've got the jobs data. So that will be Wednesday night going to Thursday morning. That's always quite volatile for the Aussie. And then into Friday, you've got Canadian data is really the focus. So anyone in the live chat room, if you're trading the loonie, that's always quite interesting. And that's pretty much it. So not going to talk any further. Going to let you guys get on with it. As I said, I will write the normal strategy report, which I have sent out to your inboxes, hopefully in time for midday. Okay, guys, have a good day and a good week ahead. As a final footnote, earnings season is still happening at the moment, but we're right at the kind of tail end of it at the moment. One thing I'd stress for anyone looking at the FTSE this week, you do have Vodafone and AstraZeneca, so two of the kind of top 10 constituents, Vodafone in particular, one of the largest companies in the UK, something to just be aware of. So on the US side of things, so we'll look out for Walmart, which kind of, I guess, bookends earnings season in the US, but obviously one of the big retailers, brick and mortar based in the States, and they often do have a propensity to move to futures given they come out in pre-market, so that's another company to look out for as well later in the week. Okay guys, have a good one. Any questions, I'll be in the chat room throughout the day. Thank you very much.